Is it still smart to buy a short-term rental in Phoenix in 2025? Airbnb in Phoenix is not what it used to be. Revenue is down, occupancy is shrinking, and everyone from out of state seems to be listing the same house with the same desert decor. So the question is it still worth buying a short-term rental in Phoenix in 2025? Let's talk about what's actually happening in the market, where investors are getting burned, and where a few are still crushing it. This video isn't about hype, it's about facts. We're digging into occupancy rates, market saturation, investor mistakes, tax advantages, and what's actually working right now in Phoenix STR space. And I'll share an alternative strategy most investors are ignoring that could give you more consistent income with less work. So let's start with the data. According to Air ROI, the median annual revenue for short-term rentals in Phoenix right now is about $35,000. The average daily rate is hovering around $259, and average occupancy is sitting right around 48%. Now, that doesn't sound terrible, right? But here's what those averages don't tell you. The top 10% of listings are making over $8,700 per month. The bottom 25%, they're barely cracking $1,400 a month. And many of those lower performing listings are sitting vacant for over 70% of the time. And those numbers, they're gross, not net. They don't factor in cleaning fees, booking platform cuts, management costs, supply restocks, or maintenance surprises. So unless your listing is in the top performing tier, a lot of owners are either breaking even or dipping into the red right now. That's not what most people expected when they bought these homes at record high prices in 2021 or 2022. So what happened? There are three big reasons why Phoenix short-term rental market feels oversaturated in 2025. Number one, easy entry. Phoenix made it super simple to start an Airbnb. There were few regulations for years, and the barrier to entry was low. You didn't need a license in most areas. You didn't need to get inspections, so naturally, a flood of investors poured in. Number two, COVID travel boom. During the pandemic, STRs were performing insanely well. Travelers wanted private spaces, remote work made longer stays more appealing, and Phoenix's sunshine drew people from colder cities. Investors saw dollar signs and rushed in, but as traveler demand returned to normal, that oversupply of listings didn't correct. Too many hosts, not enough consistent demand. Number three, emotional buying. A lot of investors didn't run the numbers. They thought, I'll buy a cute 3-bedroom, furnish it with Southwest vibes, list it on Airbnb, and cash flow instantly. But that model only works when demand is sky high. And now, guests are pickier. Competition is fierce, and your place has to be better, faster, cleaner, and more optimized than ever to stand out. So, is it all doom and gloom? Not at all. There are still investors in Phoenix crushing it with short-term rentals, but they're operating at a different level. Here's what sets them apart. They are buying the right properties, homes that have true guest appeal, a heated pool, a backyard putting green, walkability to Old Town or Roosevelt Row, dual masters for couples or group stays, not basic 3-bed, 2-bath with IKEA furniture in a random subdivision. Two, they're optimizing everything. Smart locks, automated messaging, dynamic pricing with tools like PriceLab, top-tier cleaning teams, guest experience dialed in, and it's a business, and they treat it like one. Three, they're leveraging tax strategies. STRs still hold value for tax strategy with cost segregation studies. You can accelerate depreciation in year one and potentially wipe out a good chunk of taxable income, especially if you qualify as a real estate professional or materially participate. So even if cash flow is flat, the tax benefits can make the numbers pencil for certain buyers. But here's the problem. Most buyers aren't doing that. They're buying average homes, furnishing them with whatever is in stock at Target, hoping a listing with nice photos will magically perform. And it doesn't. That's why we're seeing a pivot. Investors are looking for a new angle. Let's talk about midterm rentals or MTRs. Midterm rentals are furnished homes rented for 30 plus days. They serve a different guest than STRs. Think traveling nurses, corporate relocations, insurance claims, construction workers, remote employees who are in town for projects, and in Phoenix, that demand is growing fast. Here's why MTRs are appealing. 1, less turnover. Instead of a new guest every 3 days, you have one guest for 1 to 3 months. Less cleaning, less coordination, fewer messages. 2, more stable income. You can set a monthly rate and have fewer gaps in occupancy, especially if you use platforms like Furnish Finder, local relocation companies, or corporate housing networks. 3, lower expenses. Fewer turnovers equals less spent on cleaning, restocking, and linen damage. It also reduces wear and tear. 4, legal clarity. In Arizona, any stay over 30 days falls under the landlord-tenant law. That means you'll need a lease agreement, proper screening, and to comply with rental statutes. But for many owners, it adds a layer of predictability that nightly rentals don't. So where is MTR demand strongest in Phoenix? Near Banner and Mayo Clinic, in tech corridors of Tempe and Chandler, close to Sky Harbor in downtown Phoenix, around construction zone and growth corridors where insurance housing is common, near major highways and job centers where flexibility matters. MTR isn't perfect. It still requires a furnished setup, good communication, and marketing strategy, but it's more forgiving and right now, more consistent. So what's my honest take? If you're looking to buy a short-term rental in Phoenix in 2025, you need to be strategic. If you're chasing tax savings, lifestyle use, or building long-term equity in a market you believe in, there are still plays to be made. If you want less stress and more predictable income, MTR is the model I'd seriously look at. But if you're just trying to jump into Airbnb without a plan, without a unique property, and without systems, it's going to be a rough ride. If you want help analyzing a property, reviewing a deal, or seeing if STR or MTR fits your goals, just DM me PHX Strategy or use the link in the description to book a quick strategy session. And if this video helped you at all, give it a thumbs up, subscribe for more STR and MTR investing tips, and drop your questions below. I respond to every one of them. In the next video, I'm going to walk you through exactly how to analyze a midterm rental property, even if you're not a numbers person. So stick around and I'll see you there.